Okay, good morning once again. Problem number 4 for today's discussion. From the following balances obtained from the books of Shiva, prepare trading and profit and loss account. Okay, prepare trading and profit. Trading and profit and loss account. We were doing only trading account, we were doing only profit and loss account. But the joint statement we are going to do now, the joint account. Okay, so trading and profit and loss account, right? Okay, look at this. There's an opening stock on the first day of June 2016, 9,000. Purchases made during the year 22,000. Sales 42,000. Expenses on purchases 1,500. Bank charges paid 3,500. Bad debts 1,200. Sundry expenses 1,800. Discount allowed 1,700. Expenses on sale 1,000. Repairs on office furniture 600. Now there's an additional information given. Okay, what is that? There are 2 points given. Point 1 is closing stock on 31st December 2016 was 4,500. Okay, this is a closing stock. And point 2 is manager is entitled to receive a commission of 5% of net profit after providing such commission. Look at this one. This wording is different from the previous one. After providing such commission. After providing such commission. What was previously done? What was previously done? Okay. Before charging such commission. This is, this is the previous scenario. Now the present problem says after providing such commission. Okay, this is interesting. So let's go with the solution. Okay, and how do we go about? Draw lines. How many lines? How many columns do you need to draw? 4 columns. Okay, I am excluding journal folio column, right? 4 columns, and we are going to give the heading now as, yeah, come on, trading and profit and loss account. For the year ended, okay, for the year ended, what's the date on which we are preparing? 31st December 2016. Okay, what's the question? Prepare trading and profit and loss account. Okay, trading and profit and loss account. Okay, trading and profit and loss account. Yeah, on this date, we have to prepare the last day. So ended 31st December 2016, and this is going to be centerlined. Okay, and if needed, you can bold it. Okay, yeah, right. Then particulars, an amount. Okay, particulars, amount, right? Then same thing on the right side as we do on the debit. Do the same on the credit side also. We have to give the, on the top we have to give debit and credit. Yes, 2 horns we have to give to the account. Okay, it is like 2 horns to the, bull or a ram. Okay, it is like this. Okay, the debit and the credit. All right, done. Let's take the items one by one. Okay, now you're starting the trading account. First, let us finish the trading account. What's the first item in the trading account? Come on, 2.
Stock.
Yeah, 2. Opening stock. 2 opening stock. How much? opening stock. This stock we have to take, not this stock. Look at this. This is not to be taken. Opening is taken here, 9,000. Next, purchases, expense, debit, purchases. Okay, how much? 22,000. Okay, and there are some expenses related to purchases. Okay, take that also. To expenses on purchases. On purchases. How much? 1,500. Okay, right. Then just scan through. Is there any other item that we are missing which has to be dumped into trading account? Yeah, purchase we have taken. Sales, buy sales. Buy sales. How much? 42,000. Okay, 42,000. So we have taken purchase, we have taken opening stock, sales, we have taken purchases, expenses, we have taken bank charges, not part of the trading account. Bad debts, not part of the trading account. Sundry expenses, no. Discount allowed, no. Expenses on sale, no. Repairs on office furniture, no. These are not the items to be taken here in the trading account.
Sir,
yes, sir.
I just wanted to ask why expenses on purchases is in trading account and expenses on sale is in P&L account?
Yeah, expenses on sale. Look at this. What you take in profit and loss account is the selling. Listen, ma. The selling SAD. You have to remember as SAD. Selling, administrative, and distribution expenses are to be taken into profit and loss account. Remember, SAD. SAD. Selling, administrative, distribution expenses come under profit and loss account. Okay, and all the others will come in trading account. The expenses directly related to, yeah, it is a similar doubt you will come across. Depreciation. What's the rule to take an item into trading account? It should be direct expense. Okay, now when you look at the depreciation on machinery or plant, okay, where do you take this depreciation? You take it in the balance sheet. You take it in, you take it in the profit and loss account instead of trading account. Okay, why? That's a convention followed because it is arbitrary. How much percentage of depreciation is charged, it depends on the idea. It is the decision of the board members. Okay, also the directive of the Central Board of Direct Taxes, right? So this is not an actual amount incurred. This is not an actual amount incurred. It's a provision you're making. Depreciation is a provision you're making. So therefore, they drop it in the profit and loss account instead of trading account, though it is a direct expense. So similarly, the expenses related to sales come under selling and distribution expenses. Okay. So which is appearing in the profit and loss account. Okay. Done? SAD.
Okay.
Remember as SAD. Okay, so that there is no confusion. Selling and administrative and distribution expenses to be taken in profit and loss account. Remember as short form SAD. Okay. Sales. Okay. Any other item? Manager is entitled, that goes to the profit and loss account. Okay. Now close the trading account. 42. Hey, one more item is missing, right? What is that? Buy closing stock. While the opening stock appears on the debit, the closing stock appears on the credit. 4,500. And the total amount is 46,500. Okay, 46,500. Okay, and what is the difference between this total? 9 plus 22, 31, 32,500. Okay, 32,500 is deducted from 46,500. How much?
14,000.
14,000 is the gross profit. To gross profit. Okay, Now, this is the answer of the first part of this. Let's say if it is for 10 marks or 12 marks, okay, this carries 4 marks. The remaining solution carries the remaining marks. It's like that. Right. Let's come down. Okay, this is trading account total, right? Okay. Now, by gross profit, look at this. I'm just bringing it here. How much? 14,000. Okay, then take the remaining items which you have left. What are the items left? Bank charges, two bank charges, two bank charges, two bank charges, two bank charges. How much? Bank charges 3,500. Next, bad debts. Is there any adjustment for bad debt? There's no adjustment, right? If there is an adjustment like provision for doubtful debts, create a provision for doubtful debt, then we would have considered. Oh, there's no adjustment for bad debt. So bad debt 1,200. Okay, two bad debt. Okay, two bad debt. Okay, what is that? 1,200. Next. Yeah, two bad debt, 1,200. Next is, what's next? Sundry expenses, two sundry expenses, two sundry expenses, two sundry expenses. How much? 1,800. 1,800. Okay. And discount allowed also is an expense, a loss. Okay. To discount allowed. Discount allowed. To discount allowed. Okay. To discount allowed. 1,700. 1,700. Okay. Expenses on sale 1,000. Expenses on sale, two expenses on sale. Now you got it. Expenses on sale comes here, while expenses on purchases is taken in the trading account. Okay, look at this. How much? Expenses on sale 1,000. Next, repairs of furniture. Repairs, two repairs. Okay, how much? 600. Okay, 600. All right. Now, is there any other item? Yeah, please scan through the items that we might have missed. Are there any items? Repairs. In the extract of, these are the abstract figures of the trial balance. We have done with everything. 1, 2, 3, 4, 5, done. 6, 7, 8, 9, 10, done. Okay, closing stock also we have taken, right? Only thing left over is manager is entitled to receive a commission of 5% on net profit. After providing for such commission, okay, after providing for such commission, all right, so you have to just mark it. All right, this is important. Look at this. Let us come to calculation of manager's salary. Manager's salary. How much? Calculation of manager's salary. How much? We have to calculate. Okay, we have to calculate. How do you calculate? Come on. Is equal to yeah, is equal to net profit into 5 by 5 by 100. Okay, and net profit is equal to yeah, look at this. What is this total? Please tell me this total. This total. Or simply do one thing. You deduct all these items one by one from 14,000. 14,000 minus 3,500, 1,200, 1,800, 1,700, 1,600. Go on deducting. And what's the final figure that you get?
9,800, sir.
After deducting all this?
No, the addition.
Oh, the addition is 9,800. 9,800 deduct from 14,000, sorry, 14,000. 14,000 minus 9,800. Yes. 14 minus 980.
4,200.
4,200. Okay. So net profit is 4,200. Right? So therefore, manager salary is equal to, okay, is equal to net profit is 4,200. Okay. Now look at this one. This is, if it is before, what I have written is right. Net profit into 5 by 100. But now there's a twist here. After providing for such commission, there's a twist here. After providing for such commission, when I say, then it should be 105. 5% by 5 by 105 is 5% after providing for such commission. Okay, so therefore 4,000 into, okay, 5 by 105 is equal to 4,200 into 5 by 105. Quickly, only Shabri should do. Why others can't do it?
Sir, why 105, sir?
This is after providing. You know, look at this. We don't know what is the commission, right? We have to calculate the commission. You just calculate and tell me. You just give me the figure. I'll show you how it is. 42 into 5 by 105. Now, because of this online classes, you know, you have a habit of calculating on the phone, and therefore, because you're using it for Zoom and you're not able to calculate, so therefore, keep a calculator beside you when you're coming for the accounting class, whether it is online or offline. Without calculator, you know, it's like going to war without a sword. You'll be killed, you'll be failed in the examination, for sure. Because you don't even know the tables properly. Right? At least take the help of
200, sir.
How much? 200. Okay. So 200 is manager's salary. To manager's salary. Okay. Manager's salary. Manager's salary. Okay. And what is the total? The total is 14,000 on the right. Okay. And 9,800 on the left, okay, and the remaining balance is a balancing figure, okay, balancing figure. What's a balancing figure? 4,000. What is this? To net profit. Net profit. Okay, 4,000 is the net profit. That's the end of the solution. Now I'll come back to the doubt raised by Sabri. Look at this. The problem says 5% of net profit after providing for such commission. Now look at this. Net profit is 5%. Okay. So net profit is 4,000, right? 4,000 into 5%, 5 by 100 is equal to how much? Tell me.
200.
200. So this 200 is what we have taken here, no? Yes. The same 200 we have taken here, no? Right, Shabri?
Yes, sir.
So this is this is the formula for calculating. When this is unknown to you and a percentage is given, then this is how you have to calculate. This manager, you know what he says is calculate 5% on net profit after providing such commission. After providing such commission only you don't know. So after providing for such commission, look at this. Because I know commission, I have dropped the commission. After that, there is a net profit of 4,000. On that 5% is okay. Okay, 5 by 100 I have taken. But before that, I don't know this 200, right? So to calculate this, we use the same, percentage, okay, but differently. Net profit multiplied with, okay, net profit multiplied with, look at this one. I should write here like this: net profit before such commission, okay, before such commission, multiplied with, multiplied with 5 by 105, 5 by 105. It is calculating the unknown figure, right? Calculating the unknown figure. So this is the equation that we are using, 5 by 105. In the previous case, it is straight before such commission. So therefore, we didn't need to struggle at all. Straight away into 10 by 100. But here, after providing, so therefore, we have to use this equation. Right? And let's say if it is 10%, right? Then 10 by 110. 10 by 110. Okay. Let's say if it is 20%, then 20 by 120. It's like that. Do you understand? Right? So this is how, this is a frequent, scenario that we will be coming across, and you have to do this way. When some figure is unknown, okay, and we have to calculate that figure, and this is how we have to calculate using the same percentage. Okay. Right? So let's go to the next